Of course, the introduction that you have made, Mikhail, is the introduction to a sort of 2 or 3 day conference, but I will try to look at some of the issues that you mentioned, just my way, I mean, from my experience and how I see those challenges related to the convergence. And I would like to start by a few remarks on what are actually what is usually behind the changes in the European Union, or what are the forces which make us change some elements, or in general European integration. And I think recently you might have read that there are many opinion makers or givers who claim that Europe is moving from crisis to crisis, that usually the change is crisis driven. I do not subscribe fully to this, but if you look at recent years, probably you can find also some evidence there. But I also think what is important in the context of our discussion is to see the changes that come to European integration as really linked either to external pressures or internal pressures, or the combination of those pressures. And I think in the European integration history, we can also see the periods where Europe is clearly inward-looking institution or organization, or we can also see the periods where we become more outward-looking. And I think this is also important, I think, to be aware of. And I think that crisis justifies, to a certain extent, this recent inward-looking philosophy that clearly dominates in the European Union. But then we have recent months, and we have the Ukrainian and, let's call it also, Russian episodes. I'm sorry for the words, but we could probably say also crisis, which generated huge external pressure on European Union, and that clearly we already see today, that this pressure coming so strongly from our neighborhood makes us reflect on our military spending pattern, makes us also reflect on effectiveness of our foreign policy, including the broader neighborhood. Some people are saying we are inventing NATO. So this external pressure can be sometimes extremely effective in pushing Europe towards change. And in this context, I think we have to see what you alluded to strongly, is that the crisis, in fact, has led us to unprecedented range of reforms due to both external and internal pressure. And I think when it hit, we could see very quickly how differentiated European Union is on basically all accounts. But we could also see that or that led us also to further analysis, and we could also see that, in fact, the convergence machinery had been faltering already for quite some time before the crisis hit. So the crisis struck, but the territory which was already sort of open to this kind of hit, or sensible to this kind of hit. And in this context of the crisis, I think it is important to see that in the convergence machinery that European integration has at its disposal, there is a very clear political dimension, and then there is also this socio-economic and social dimension. And on political dimension, I think we can see that there are periods of when we are less committed as European Union to the community method, to deepening the integration, where we shift the way we function towards more intergovernmentalism, or as we could see recently also towards even international agreements, like in the context of in the case of the fiscal compact. But what is important to see that this commitment to convergence in the political terms is sometimes depending on the integration fatigue. It was mentioned in the context of the Balkans, the enlargement fatigue, but I think this integration fatigue comes from time to time. But this also is often has as a root the lack of treaty legal basis. For example, in the context of the crisis, we were very often forgetting about community method and reaching out to international agreements or intergovernmentalism machinery because of the lack of legal basis for the actions that had to be taken. And there is also the so-called British factor, which from time to time prevents us from moving towards deeper integration or towards stronger convergence, towards more effective convergence machinery in the European Union. And then we have this socio economic dimension of the convergence. And here we can clearly see that at the beginning of the previous decade, in the 2000s, let's call it this way, the convergence machinery has clearly slowed down. We could see it in the intra-trade. That was the period when the global trade was just skyrocketing, and the intra-trade in the European Union was much more sort of conservative in terms of growth. We could also see at that time that the cross-border investment flows were slowing down in the European Union. We could also see that cross-border financial activity, which you mentioned also, was clearly slowing down, and the banks were more and more national territory-oriented institutions. So in general, everything that relates to internal market, I think, has been slowing down. We have, of course, policies for which I had the pleasure to be responsible for quite some time, which are rooted in the budget, which are oriented towards convergence, which is the cohesion policy, part of the agricultural policy as well. And on those policies, one could say that they were active in bringing, in bringing part of the convergence, which is reducing the differences in the growth potential. But then during the crisis, I think this convergence machinery suffered also due to the growing importance of dividing lines, which have probably existed already for decades in the European Union, but which cut across the European Union, but which were either created by the crisis, some of them, or amplified or strengthened by the crisis, or some of them also due to the way we reacted to the crisis. And I would like to elaborate a little bit on this. But I also would like to say in this context that it is not the lack of convergence or heterogeneity of the European Union that is a problem. I think the problem really is that we do not know how to cope efficiently with this heterogeneity. So heterogeneity comes by nature because there is no, and this is my reaction also to something which was said before by our colleague from Croatia, that the level of development is not a precondition of membership. So you can be very poor and meet all the criteria and join the European Union. So it's not the heterogeneity, but the way we generate instruments to cope with it, or in general, how we cope with it, so our capacity to do it. And I think that the damage produced by the crisis has also, and this is important, has also made us clearly aware of the fact that we are all part of the same union. We never talked in the European Union about spillovers of the policies of Germany or France on the situation in a neighboring country. We never talked in the European Union about the external imbalances in one country, how they influence the other countries. We realized, I think, during the crisis that we are not just a set of independent national economies. We are all dependent on each other, which is surprising that when designing policies before the crisis, we basically did not think about this dimension of the European integration. And also crisis reminded us the need to invest in convergence. So convergence is not something that is just happening because we are part of the European Union, but we realize that we have to take it as a challenge, as a policy objective, as a mission, that we have to invest in the convergence. Because the weakest, I think, member states or territories must again start benefiting from sharing the common market with stronger ones, because that's what convergence is about, that those who are weaker, they can benefit from the fact that they are in the same family with the stronger economies. And also the strongest, the richest, they should also start benefiting from the expanding markets of the weaker member states who, thanks to among others, structural funding, also grow faster. So this is something which I think has started to reach us very strongly in the context of the crisis. So no doubt, I think that if we want to be efficient on convergence, we have to tackle the existing dividing lines. But going back to the political convergence, we could also see during the crisis very differentiated degrees of appetite for reform and European solutions. It just cut across the issues, and it cut across the member states. And I would say that it's actually a miracle that in spite of different appetites and oftentimes dominating national interests, which is natural, I think, in the context of the crisis. So in this debate on the crisis-driven reforms, we have actually witnessed such an astonishing number of centralized European solutions that I think with quasi-federal character, that it's sometimes difficult to see how we manage to achieve it. And I think on these dividing lines, I would like only to mention two of them because I believe that they are the most important. And surprisingly, it's not East-West, I think, anymore. And I think on those dividing lines, I would like to say that two stand out very clearly. One is the south-north or north-south divide within the euro area, which is a challenge, and the other one is euro-non-euro divide within the European Union. And the north-south divide is unfortunately not at all a new story in the European integration. It is a reality which, in fact, has built up over time and became more prominent in 2000s. And the crisis episode added certainly the fire the fuel to this fire. And there are many, I think, factors, many reasons behind this north-south divergence. And I would say, of course, it's bad politics and bad policies. We all know that. It all contributed to this. But there is also one more factor, which is a challenge for us, because this is the essence of European integration, which contributed to this divergence. And I think we all know that for decades, the architecture of European policy making, together with the whole internal market construction, it all has been based on a one size or one decision fits all principle. And that was justified because we were building the internal market, we were building this common house to live, work, invest, and enjoy. And this alignment was more a cosmetic surgery at the beginning when we had the integration of a relatively small group of relatively homogeneous economies. But then with every enlargement, this heterogeneity was, of course, growing. And the one-size-fits-all approach required very different adjustment capacities in those economies. And this was not delivered in some of the member states, especially if you think now of Greece in particular, but probably you can find this lack of delivery in terms of capacity to have structural adjustment. We can find it also in many countries. Also, if you look at the European Central Bank monetary policy, that was clearly challenged for years by this missing adjustment capacities of the member states. And it's also not a secret that the central bank monetary policy fit better the needs of more competitive economies of the European Union. So when the crisis struck, we could see how differentiated the Eurozone as such was, not the European Union. And we could also see the internal and external asymmetries very clearly. We could see different also levels and degrees of competitiveness across the Eurozone. So the question, the challenge, I think, for us today is to what extent this heterogeneity can be addressed exclusively by this one-size-fits-all approach of some of our policies, especially monetary, or those which are important for the EMU, and to what extent we also need that this philosophy of the common currency area must be also complemented by more effective and more efficient tailor-made solutions with regard to the needed structural reforms. And the whole reform of the European Union economic governance, the European semester, the country-specific recommendations, the new EMU, genuine EMU, and the contractual arrangements of structural reforms. This is, I think, all adding to this potential challenge of creating adjustment capacities in those member states which are clearly less competitive than other economies which have problems and which need a lot of structural reforms as quickly as possible. But of course, all those policies which we created related to the economic governance in the Eurozone and in the European Union, I think they also still need to be tested in terms of efficiency, and it will come, I think, in the years to come. But definitely, I would like to say that all those reforms paint the picture of an increasingly Eurozone-focused single market, and we must be aware of that we are moving in this direction, and there is no chance to assume that this will not be the case. I think it will have to be the case also in the future, that we will be increasingly Eurozone focused in everything that we will be doing in terms of the reforms in the European Union. And that's why the second challenge, with which I would like to finish my introductory remarks, the second challenge, which is Euro versus non-Euro, as a dividing line in the European Union, which I think is absolutely fundamental from many points of view. This challenge is extremely important. And if you look at what the European Commission has been offering during the crisis as reforms, basically most of what was coming out from the European Commission, I'm thinking starting with six-pack, two-pack, and then the banking union. It is basically focused on certainly was biased towards the euro area, leaving the non-euro member states as a second group of the member states. And it was only in the European Parliament and in the Council where all those reforms have been elaborated in such a way that they allow, most of them allowed for the opt-ins, allowed the non-Euro member states who do not have, I am not talking about UK, who has a very special situation, but countries like Poland, for example, or Sweden, so to make the reforms open, or the new mechanism open to those member states from non-Euro, this is something which is done in the Council and in the European Parliament. And this is quite chaotic, I would say. So every time a proposal comes, like on the single supervision mechanism, for example, to the Council and to the Parliament as two co-legislators, then the work begins on on whether we should include also or open these reforms to the non-Euro who want voluntarily to join, and on what conditions they should be open. And it is relatively easy to make them open in terms of the decision-making process. So if, for example, the Polish banks Poland joins the single supervision mechanism, where ECB is the king, and with the reputation, which is the best reputation of European institutions, I think, which is important. So if somebody wants to join it, we managed to get the decision-making process in such a way that all those supervisory institutions from the non-Euro member states can participate in decision-making, which affect their banks, but there is no access to financial support for the non-Euro member states because the stability mechanism is only for the Euro member states. So there is, it's not a fully fledged membership, but nevertheless it is open. As also for the single resolution mechanism, which was decided quite recently. So this challenge of how to cope with the non-Euro member states, where we also need stability and where we also need convergence, this is quite a challenge to avoid a situation that we have the European integration moving in two directions, and the non-Euro today, but tomorrow maybe members, that they do not depart more and more from the system which they are supposed to join in the years to come. So this is something which is not yet, I think we don't know yet how to cope with this opt-in, as kind of blueprint for the opt-in. And what is surprising is that for the first time, we do not reach out to enhanced cooperation instrument, because we have in the treaty the enhanced cooperation, which allows some, not everybody, but groups of member states to embark on a new policy or a new policy mechanism. But we are not using it, and this could give us also the framework, the treaty framework for such an important instrument, but we are reaching out to international agreements, to intergovernmental agreements, and this is something which I think is still for Europe to cope with, how to make the use of enhanced cooperation, just keeping all those major changes to policy within the European Treaty, which would allow us to deepen, I think, the convergence, not only in terms of catching up in terms of growth, but also in terms of remaining the integrity of single market and maintaining the integrity and maintaining also the European integration at full speed among the 28. And just on the last issue which you mentioned, because you mentioned the convergence only in terms of, maybe I misunderstood, but in terms mostly of catching up. And I must tell you that when we joined the new member states, let's call them still like this, when we were joining the European Union in 2004, the catching up, we saw it mostly as the level of consumption, basically, because we had all those consumption dreams for decades accumulated, and then the catching up meant following the patterns which were established by those who were already somewhere there. And I think the recent report which we made in Poland with the support of the Austrian money, I think, and Rainer Mintz, which is exactly about this possibility of having a homegrown model for growth, which would mean catching up, but not necessarily just following the patterns which proved to be not to fit the future sort of universal patterns of change in the world and in Europe. So I think that we have to look at the catching up slightly in a more sophisticated way to see also the mechanism of keeping us together and making this differentiated Europe also working in such a way that it does not disintegrate itself as integration, the European Union, but also we have to see how we can combine it with those individualized growth models and consumption models, because I think there is no disparity or no contradiction between the convergence and also being more sort of homegrown in terms of growth and catching up. More homegrown models of catching up and convergence, I think, can be very beneficial here. I think I would stop on this.